This is Dan Stewart for your NORAM Asset Management Market Update, Friday, October 8, 2010. And I just got back today from a star-studded event at the O'Neill Center for Freedom and Capital Markets on the SMU campus Graduate Business School. It was a star-studded event with William O'Neill, founder of Investors Business Daily, Dr. Walter Williams, Stephen Moore, senior editor of the Wall Street Journal, and Dr. Michael Cox, who is the former Fed chief economist. Now back to the markets. The Dow was up 58 points to 11,006. It broke over 11 and was able to hang on. The S&P was up 7 to 1165, and the NASDAQ was up 18 to 2401. Gold was up $12.30 to $13.46. Silver was up 52 cents to $23.09. Got back over the 23 mark. Oil was up $1.19 to $82.86, and copper was up 10 cents to $3.78. So gold, silver, oil, and copper, the commodities sector, were the big winners today. And why was that? Bad economic data. What do you say? Do I mean? Well, the jobs number came out, and the survey was for a loss of 5,000 jobs. The actual was negative 95,000, for a net bad surprise of negative 90,000 jobs. Now, that gives Bernanke the green light for that stimulus, that quantitative easing we've been talking about. Yesterday, we had some positive economic data, and that's why commodities sold off, because the investors felt like Bernanke might not have the excuse to do quantitative easing. They started getting nervous, so they started taking a little profit yesterday. He's going to do it. The question is, will it be next Monday, Wednesday, a couple weeks from now? He will stimulate. It'll be good for gold and silver and commodities, and stocks for the short term. In any event, Treasuries, 5-year 1.01, 10-year 2.381, and 30-year 3.746. But the interesting story on the bonds is that 5 and 10-year bonds yields were down and prices were up again, and 30-year bonds yields were up and prices were down. Folks, people are moving out of longer-term bonds to shorter-term maturities. Don't get caught being the last one out. If you've got long-term bonds, you may want to consider moving to shorter-term duration bonds, or even taking profits. I'm selling my bonds. The US dollar was down against the euro, the pound, and the yen once again. Those poor Japanese can't spend enough money to make their yen go down. Europe was mostly lower because Barclays was down 2% and our US jobs report. Britain, France, Spain, and Switzerland were all down among the major exchanges. However, Germany and Italy bucked the trend. They were up 0.25%. Over in Asia, it was down for the most part, with the exception of Shanghai. China was up over 3%, and Hong Kong was up 0.25%, with a Moody's upgrade of Chinese government bonds. Japan and Indonesia were both down 1%. This has been Dan Stewart for your NORAM Asset Management Market Update, Friday, October 8, 2010.